Good evening. This is Rudy Stirk, Associate Director of Marketing Communications for the Connecticut Green Bank. Thank you all for joining our presentation on Green Liberty Bonds. Today, I have the pleasure of being joined by a number of Green Bank colleagues, including Lonnie Reed, Chair of the Connecticut Green Bank, Brian Garcia, President and CEO, Bert Hunter, Chief Investment Officer, Eric Schrago, Managing Director of Operations, and Mike Yu, Director of Clean Energy Finance. We are also joined by our underwriters, including Eric McKean of Stifel and Al Quintero of Ramirez & Company. We are excited to bring our second issuance of Green Liberty Bonds to market and build upon the success of our initial offering last year. Before we go forward, a point of housekeeping to address. We don't expect anyone to read the disclaimer on the screen at the moment. But here is a quick summary. Under no circumstances shall the information in this presentation constitute an offer to sell or the solicitation of an offer to buy, nor shall there be any sale of securities in any jurisdiction in which such offer, solicitation, or sale would be unlawful prior to registration or qualification under the securities laws of any such jurisdiction. Offers to purchase securities may be made only through a registered broker-dealer and through an official statement. It's also worth noting that this webinar is being recorded. The slide deck and recording will be posted to our investor relations website, www.greenlibertybonds.com. We encourage everyone to read the full disclaimer when this is posted. Lastly, we have saved time at the end of this presentation for a question and answer period. Please submit your questions throughout the GoToWebinar interface during the presentation, and we will answer them at the end. So I mentioned our investor relations website found at www.greenlibertybonds.com. You can see the URL and the screen on your screen in front of you. For those who have not already visited the site, you should go to sign up for notifications so you can stay up to date on this and future offerings and be informed about other relevant Green Bank news. You can also contact us directly through this site. So with those items covered, tonight we're going to introduce or reintroduce you to the Connecticut Green Bank, discuss why we have created the Green Liberty Bonds, and provide some details of our 2021 offering. So let's start with who is the Connecticut Green Bank. For that, I will turn this over to Brian Garcia, our President and CEO.
Thanks, Rudy. Many of you listening today from Connecticut know who we are. We're the nation's first green bank. The Connecticut Green Bank was created by a bipartisan act of legislation in July of 2011. We focus on providing families and businesses with access to capital they need to finance clean energy improvements to their homes and buildings. To provide that financing, we are supported by a system benefit fund from ratepayers of Eversource Energy and United Illuminating through a clean energy fund surcharge that amounts to between $7 to $10 per household per year. We are supported by regional cap and trade allowance proceeds through the Regional Greenhouse Gas Initiative, otherwise known as RGGI. Those are our state support resources. We also receive funds from the federal government through competition within various agencies like the Department of Energy or U.S. Department of Agriculture, or through formula allocation in the case of the American Recovery and Reinvestment Act. Something to follow on the federal front is the Clean Energy and Sustainability Accelerator, which is essentially a national green bank modeled after the success of the Connecticut Green Bank. It has passed the House several times. A bill will be proposed in the Senate this year, and President Biden recently announced it within his American Jobs Plan. Beyond public sector support, we are looking for investment support by the people, families of Connecticut, and citizens of our country through the steady and ongoing issuance of Green Liberty Bonds. Building upon the success of last year's issuance, we are proud to bring to market our second issuance to meet the growing demand and need for green investment. Next slide. The mission of the Connecticut Green Bank is to confront climate change and provide all of society a healthier and more prosperous future by increasing and accelerating the flow of private capital into markets that energize the green economy. We achieve that mission through three goals. First, we invest the resources we receive in a way that mobilizes multiples of private capital investment into the green economy of Connecticut. Second, by increasing investment in the green economy of Connecticut, we strengthen our communities by making the benefits of the green economy inclusive and accessible to all individuals, families, and businesses in our state, especially those in vulnerable communities. And lastly, we are pursuing investment strategies to advance and transform markets for green investing. The Green Liberty Bond is an example of that. Next slide. We issue annually our comprehensive plan, which is our organization's guiding document with the title Green Bonds Us. Today, we are talking about a green bond, the Green Liberty Bond, an investment instrument to provide capital to projects that confront climate change. But we don't just mean the Green Liberty Bond when we say Green Bonds Us. We believe that protecting the environment by confronting climate change can also bring us together. Green, the environment, bonds us, unites us. The environment unites us. Green bonds us. Our vision is a planet protected by the love of humanity. And we believe this theme is present in all the work we do and the lives and communities we impact, and that through this energy and love, we can make a difference against climate change. On the national level, the Clean Energy and Sustainability Accelerator, if passed, will continue this theme of unity and environmental justice by confronting climate change. In Connecticut, we provide programs to families and businesses that make a positive impact in our communities. Now let me turn the presentation over to Lonnie Reed, the chair of the Connecticut Green Bank.
Thank you so much, Brian, and good evening, everybody. It's a pleasure to be with you again. You know, the Connecticut Green Bank strives to provide families and businesses, all families and all businesses, with access to capital to finance clean energy on their properties or within their communities. Working with local companies like small business energy efficiency and renewable energy contractors, and working in partnership with community banks and credit unions, we enable more investment in the growing green economy of Connecticut. Through financing programs like Commercial Property Assessed Clean Energy, or CPACE, the Green Bank Power Purchase Agreement, and the Smarty Loan, we reduce the burden of energy costs on our families and businesses through the deployment of clean energy. Next slide. Working together with our partners, we have been successful, and we're very proud of that. We've set the standard. Since our inception, we have enabled nearly $1.7 billion of private investment in Connecticut's green economy, leveraging $1 from public sources into mobilizing $7 of private investment. This investment has generated nearly $100 million in state tax revenues from individual, corporate, and sales taxes. We have helped create more than 20,000 job years while reducing the burden of energy costs on more than 55,000 families and businesses through the deployment of clean energy. We have helped avoid the emission of nearly 9 million metric tons of greenhouse gas emissions over the life of these projects, and avoided the emissions of local air pollution to help improve the public health of our citizens. And as a result of the social and environmental impact, Connecticut was awarded the prestigious Innovations in American Government Award by Harvard University's Kennedy School's Ash Center in 2017 for sparking the Green Bank movement. We have a distinguished board. As the former co-chair of the Energy and Technology Committee, for the Connecticut General Assembly, I was appointed by Governor Lamont to chair the Green Bank Board. We have ex officio members from the Department of Energy and Environmental Protection, the Department of Economic and Community Development, and the Office of the Treasurer. We have members of the board that are appointed by the majority and the minority leaders of the House and the Senate. To support the governance of the Connecticut Green Bank, we also have 4 committees, including the Deployment Committee, where a majority of our transactions are approved, the Budget, Operations, and Compensation Committee, where our annual budget and targets are developed, the Audit, Compliance, and Governance Committee, where our financial audits are developed, including methodologies that measure the social and environmental impacts we are making, and the Joint Committee of the Energy Efficiency Board and the Connecticut Green Bank Board, where we coordinate on financing and incentive programs with our utility partners. We would invite all of you to attend a board meeting of the Connecticut Green Bank. They are open. They are open, and we invite public comment. We also, the dates and times are available on our website, and we post all the materials and the videos from the meetings. The next one is Friday, April 23rd from 9 to 11 a.m. And I think you really appreciate our board members and how they interact. These people are very committed and very engaged, and these board meetings are really interesting. So we welcome you. What is essential about the Green Bank model is that the public sector mobilizes more private investment in the green economy. These are some of our public-private partnerships leading to more investment in clean energy in Connecticut. For example, we have partnered with US Bank and Posigen to make solar PV and energy efficiency more affordable and accessible to low and moderate income families. That's a key goal of ours, to really pursue equity in all of this. We work with Fifth Third Bank, Liberty Bank, and Amagassett Bank to finance a fuel cell project on a Navy subbase. We've engaged in public-private partnerships that have mobilized more than $800 million in private capital investment in the green economy of Connecticut. And to continue, let me turn this back over to Brian Garcia to discuss why we created the Green Liberty Bonds. Brian?
Great. Thank you, Lonnie. Indeed, so let's turn our attention to why we have created the Green Liberty Bond. Because climate change is real, and there's so much more to do. Here's a picture of a wildfire in California in 2019. There were nearly 8,000 fires that year, burning over 250,000 acres with 5 fatalities. Next slide. Here's a picture of a wildfire in Australia. There were nearly 6,000 buildings destroyed from those fires, burning over 46 million acres with 33 fatalities. It is estimated that over 1 billion animals have been killed and some endangered species driven to extinction. This is the devastation of Hurricane Harvey in 2017, which caused $200 billion of damage and 77 fatalities, with the majority of the damage in Texas. Hurricane Maria in 2017 caused $90 billion of damage and over 3,000 fatalities. We must learn to care about each other more. And of course, we felt it too. This is Hurricane Irene in 2011. Here is a man helping someone else wade through the coastal flooding, which caused $17 billion of damage and 49 fatalities in the mid-Atlantic and Northeast. And this is part of the devastation of Tropical Storm Isaias in September of 2020. That was a fast-moving hurricane downgraded to a tropical storm that hit Connecticut with powerful winds and drenching rains, causing widespread damage in a matter of several hours. More than 800,000 homes and businesses lost power during this event. These are just a few of the heartbreaking examples of the reality of our climate crisis. But there's hope. Experts have been suggesting for years that increased investment in clean energy deployment can help. And green bonds have the potential to increase investment in our state, across our country, and around the world to confront climate change. $305 billion of green bonds were issued globally in 2020, with US issuances of about $50 billion. About 60% of the green bond proceeds were in clean energy, renewable energy, and energy efficiency. The Climate Bond Initiative believes $1 trillion a year is in sight. This slide shows an article from Forbes magazine speaking about the importance of green bonds. Green bonds can solve our climate crisis. What is interesting about this article is that it not only cites two of the preeminent energy companies seeking to confront climate change by reducing greenhouse gas emissions, but it also highlights the Connecticut Green Bank's award-winning asset-backed security issued in 2019. Let me turn this back to you, Rudy, to say a little bit more about the findings of some innovative marketing research you led.
Thank you, Brian. With green bonds on our mind, we wanted to learn more about our Connecticut residents to understand the local market for green bonds. In 2019, we worked with Great Blue Research to conduct a survey to understand the level of interest in green investment. We surveyed families that had already demonstrated their interest in green technology by installing rooftop solar PV systems, and we surveyed families that hadn't installed solar and were simply randomly selected. We asked them, if you were interested in investing in green projects, what types of green projects would you support through your private investment? You can see on the slide on the screen that recycling and waste reduction was the #1 green investment of interest, with clean water and solar PV projects at #2 and #3, respectively. In addition to knowing about the type of green projects families would support, we wanted to learn about their current investments. We wanted to not only understand whether families were making investments in stock portfolios, 401ks, and other funds, over 85% of the respondents were, but we also wanted to understand their knowledge about investments available in the market. Over 60% of respondents believe they were knowledgeable about investment options in the market, including interest in purchasing mini green bonds or small denomination bonds whose proceeds are used to support green projects. As we began to analyze the responses from the survey, we discovered that smaller denomination bonds, those bonds that are around $1,000 or less, became attractive to more families and more accessible for investment based on household income. This research helped us design a bond that we believe will be of interest to investors who want to confront climate change. Brian, back to you.
So in honor of the 50th anniversary of Earth Day in 2020, the Connecticut Green Bank created the Green Liberty Bond, a type of green bond whose proceeds are used to invest in projects that confront climate change in Connecticut. Beyond providing families and businesses with access to capital to finance clean energy improvements on their homes and buildings, the Green Bank is now issuing bonds so that families can invest in green projects for others in their community to save for the planet. We were very pleased by the response to our 2020 issuance of Green Liberty bonds. In the midst of a global pandemic with so much uncertainty, the support of this new subcategory of green bonds was overwhelming. The bond sold out in 2 days, issuing nearly $17 million of bonds, with the majority going to retail investors. Above and beyond the sold-out success of the issuance, we were humbled to earn recognition from leaders in the bond world. The Green Bank won 2 environmental finance bond awards in 2020, one for innovation in bond structure and one for asset-backed bond of the year. The bond buyer also recognized our 2020 Green Liberty Bond as Innovative Deal of the Year. A Green Liberty Bond is simply a category of green bonds with the focus being to provide citizens with another way to invest to confront climate change. It has 3 specific features to it. First, the use of proceeds from the bond must go towards projects that confront climate change and create jobs in our communities. These can be projects that mitigate greenhouse gas emissions, like clean energy, for example, or projects that help society adapt to the impacts that climate change is causing, like coastal resiliency, land conservation, and more. Second, modeled after the Series E war bonds of the 1940s, the bonds must be able to be purchased by everyday citizens through smaller denominations, no more than $1,000 denomination. More than 85 million Americans purchased Series E war bonds totaling $185 billion back in the 1940s, or about $3 trillion today. And thirdly, because we want more and more citizens to buy green bonds, there must be consumer protections embedded within the bonds. So these bonds are required to have independent certification and verification that the use of proceeds are being invested to confront climate change. I'll ask Eric Schrago, our Managing Director of Operations for the Green Bank, to give more details on green certification. Eric, you're on mute.
Thank you. Sorry. Certifying these bonds are truly green was important to us because we know it's important to you. Working with Kestrel verifiers, we've ensured that the bonds meet the Climate Bonds Initiative standard for zero carbon renewable energy resources, solar photovoltaic. CBI is truly the gold standard in assuring bond proceeds have their intended climate impact. When we implemented it, we were the 23rd programmatic certified CBI issuer. This means that any of our bonds that finance or refinance solar photovoltaic systems will be CBI compliant. This is a special designation. Next slide. The deployment of residential solar PV in Connecticut creates a lot of societal benefits. Many of these social and environmental benefits are consistent with the United Nations Sustainable Development Goals. By increasing investment in clean energy for low to moderate income families, we reduce the energy burden on the most vulnerable communities. Because we have been successful in helping low to moderate income families reduce the burden of energy costs through solar power and energy efficiency, Connecticut is known as a solar with justice state. By displacing polluting sources of energy with zero emission renewable energy, we improve the air quality of our state, helping create healthier communities. By increasing and accelerating the deployment of clean energy across the state, we advance Connecticut's green economy, creating important jobs and communities while confronting climate change. And now I'll turn this over to Bert Hunter to provide specific details on the 2021 Green Liberty Bond issuance. Bert?
Thank you, Eric. It takes a team of dedicated professionals to bring the Green Liberty Bonds to the market. And again, we have brought together a team of the leading thinkers and doers when it comes to issuing green bonds. In fact, this team is substantially the same as for our first bond we issued in July 2020 in the midst of a global pandemic, which speaks to the capabilities of this fine team. Bob Lamb has been our creative municipal advisor from Lamont Financial Services. Bruce Chudwick and Matt Ritter are our steadfast bond counsel from Shipman and Goodwin. Eric McKean, Barry Gottfried, and the team from Stiefel are the senior managers bringing a strong retail investor marketing presence to our second issuance of Green Liberty bonds. Al Quintero, Brad Friedman, and the team from Ramirez & Co. are the co-managers. Our underwriters are supported by their counsel, Ballard Spahr. The Bank of New York Mellon is our trustee with experience in small denomination bonds. DNV is the independent engineer for our issuance and has presided over $1 billion in securitizations in the market. Climate Bonds Initiative is the independent certifier, and Kestrel Verifiers is the independent verifier of the Green Liberty Bond. That completes the team that is bringing these Green Liberty Bonds to the market. With that, I'll pass the presentation over to Al Quintero of Ramirez, who will provide an overview of the Series 2021 Green Liberty Bond before we get into some of the details of the structure, which will be reviewed by Michael Yu, Director, Clean Energy Finance for the Green Bank. Al, over to you.
Thanks, Bert. So for this Green Liberty Bond, we have a preliminary par amount of 23.6 million approximately. Proceeds are going to be used to refinance expenditures that the Green Bank used related to its residential solar incentive program, RSIP, to fund a special capital reserve fund and to pay costs of issuance for the bonds. Now, the retail order period is Wednesday, April 21st. That is the day that's dedicated to the individual investor, where retail investors get priority in buying the bonds. The following day, April 22nd, Thursday, is institutional order day, where institutions come in and put in their orders for the bonds. The bonds will be settling, thus investors receiving their bonds on May 11th, 2021. The structure is current interest bonds amortizing between years 2021 through 2036. That's about 1.5 million in par a year. And as mentioned before, denominations will be in $1,000 multiples. Tax treatment, these bonds will be federally taxable, but exempt from Connecticut state income taxes for Connecticut investors. Our redemption provisions are a par call for the bonds on November 15th, 2030, and we have received ratings from S&P in the single A category. So we have an A rating on the bond. I'd like to now turn it over to Mike Yu to give you additional detail.
Great, thank you. So this slide covers at a high level how SRECs fit into the clean energy landscape and this transaction. And the foundation lies with our Residential Solar Investment Program, or RSIP, which has provided upfront incentives to thousands of solar systems throughout Connecticut. This is a diverse fleet of different installers and owner structures. So some are homeowner owned, and some are third party owned through leases or power purchase agreements, but with the common factor that they've all received Green Bank incentives to help defray the costs of installation. In exchange for that incentive, when the panels produce clean energy, the Green Bank obtains a renewable energy credit. Every megawatt generated results in the creation of a SREC. So what do we do with that credit? Well, we've entered into 15-year master purchase agreements with Eversource and United Illuminating, Connecticut's utility companies. This is a fixed price contract, and in this case, for this tranche, it's $47 per SREC. So on a quarterly basis, we take what that portfolio has generated, create the associated SRECs, and sell them to the utilities. And this will continue for 15 years, the term of the tranche. And please refer to the offering statement for more details about the SREC creation process and the revenue timing. By purchasing SRECs from the Green Bank, the utilities are helped to comply with their clean energy goals. And the revenues generated by SRECs are used to help support RSIP incentives, as well as cover administrative and financing costs associated with the tranche. Now, this is a statutory program that ends at the earlier of when we hit 350 megawatts or the end of 2022. On this slide, this is a snapshot of Tranche 4, the collateral backing bonds. So it's nearly 7,000 systems aggregating to 59.37 megawatts of capacity. They're on average about 2 years old, which is quite early in the expected 20+ year life of the systems, but it also gives us some nice seasoning that we can iron out any glitches that sometimes occur in the first year or so of operations. We also break out the ownership structure, as well as the percentage of systems in Eversource or UI territory. Although I'll note on that last point that regardless of the territory breakdown and whose grid is physically connected to, that the MPAs provide that Eversource purchase 80% of the SRECs and UI 20%. So turning to the security for the bonds, we have SREC revenue that's derived from Eversource and UI, the Connecticut investor-owned utilities, and both of these off-takers are investment grade, as Al mentioned earlier. They're permitted and they're also permitted full cost recovery as it pertains to SREC purchases. And the SRECs supporting this bond issuance are in our fourth tranche, which was created last year. So out of the nearly 7,000 systems in the tranche, Every SHREC generated from these systems will be purchased at $47 per SHREC for the next 15 years. And when you look at that life of that revenue, it's expected to generate over $35 million over the course of the life of the bonds. But notwithstanding these high quality SHREC cash flows, the ultimate security for the bond issuance is the state's SCARF, a special capital reserve fund. So this will be funded at the maximum annual debt service to cover any deficiency that might arise, and will also be replenished by the state should there ever be a draw. And this funding is deemed appropriated, meaning there's no need for any additional legislative action for this to occur. So the SCARF reserve fund will also be funded at close in an amount equal to the MADs. Finally, the Green Bank pledges not to issue any additional bonds secured by Tranche 4 SHREC revenues. So I mentioned the MPAs earlier, but it's worth going over some key highlights again. So the MPAs have been approved by Connecticut's Public Utilities Regulatory Agency and permits full cost recovery by the utilities. Every year, the utilities purchase a tranche from us, a 15-year contract with a fixed price per SHREC. Tranche 4 was executed with the utilities last year at $47 per SHREC, and we are already seeing revenue flow from that contract, which flows quarterly. Eversource purchases 80% and UI 20%, regardless of the grid the systems are physically connected to. And we receive that revenue quarterly, with the revenue coming approximately 5 months after the quarter end. So the first quarter ending March 31st, that revenue would flow to the Green Bank sometime likely in August. So please refer to the offering statement for more details about how the timing of this revenue flows, and as well as the MPAs and associated obligations. So in the transaction diagram, there are two key components. The gray area is the creation and revenue generation from the SHRECs themselves. Up at the top, you have the system owners, whether it's homeowner owned or third party owned. And these are on the roofs generating clean energy, which is then turned into renewable energy credits. The Green Bank will take the credits and monetize them with utilities under the MPAs. So we send them the SHRECs and they remit payment to us to a trustee controlled collection account. The trustee will then send the funds to the note holders according to a predetermined waterfall, and with any residuals flowing to the Green Bank. In the green area, you see the notes and the investors, as well as the additional security for the transactions, which is the state's SCARF credit enhancement. And this acts as a backstop should SHREC revenues be insufficient to meet debt service. So please refer to the offering statement again for a more in-depth look at the relationship between all the parties. And now I'll turn it back over to Bert to walk through the flow of funds.
Thank you, Mike. On this slide, we have an overview of the flow of funds. A complete description can be found in the preliminary official statement. On a quarterly basis, as and when received from the utilities, as Mike just explained, the trustee will deposit the SHREC payments into the reserve fund. From these amounts, the trustee, after settling its own fees and expenses, will pay into the interest account and the principal account of the debt service fund amounts sufficient to make the requisite interest payment and principal payment coming due. If there should be any shortfall in the debt service fund, the trustee would transfer any deficiency from the special capital reserve fund into the debt service fund. That would make sure that full debt service is available for payment to bondholders. If the trustee transfers funds from the SCARF fund, in that instance, the state treasurer must make up this deficiency. This payment from the treasurer is deemed appropriated, meaning there is no requirement of any legislative action to make that payment. Note, at closing, the SCARF is funded with bond proceeds in an amount equal to maximum annual debt service, as explained by Mike Yu. Next, the trustee will apply any amounts required for the redemption fund. And finally, if there are any amounts left, the balance is to be placed in the 2021 SHREC Economic, Energy, and Security Fund, which ultimately gets transferred to the Green Bank. With that, I'll pass the presentation over to Eric McKean to walk through the projected annual revenues and bond financing details. Eric?
Thank you, Bert. Here we display the sources and uses for the Green Liberty bonds. The bonds will primarily fund the Green Bank's RCIP expenditures, the Special Capital Reserve Fund, and pay cost of issuance. These amounts here are rough estimates. On the next slide, we show the projected debt service coverage from what are called net SHREC receivables. These are basically the revenues that pay for the bonds. We have three revenue scenarios: P50, P90, and P99. The P measures are derived from DNV, the independent engineer, and they're statistical estimates of how often, given variances in weather and system performance, the solar generation will exceed that value. So under the P90 scenario, revenues derived from the generation and sale of SHRECs is expected to meet or exceed this level 90% of the time. We're sizing the bonds so that the expected P90 revenues exceed the bond's debt service coverage by 1.15 times. Moving to the financing details slide for the Green Liberty bonds, we'd like to review this one more time. The estimated par amount is expected to be $23.6 million. The interest rates will be fixed for each maturity, and we expect the maturities to be in year 2021 all the way to 2036. Interest on the bonds will be paid semi-annually, and interest is taxable federally, but exempt from income taxes in the state of Connecticut. The bonds will have an optional redemption provision starting November 15th, 2030, and the denominations are $1,000, meaning that's the minimum investment amount. On the next slide, we have our schedule. Early next week, we're going to start communicating to the market estimated yield levels. And on Wednesday, April 21st, we'll have the dedicated retail priority order period. And this is where retail investors will have first access to the bonds. On the next day, we'll be celebrating Earth Day with the formal pricing of the Green Liberty bonds, and we'll have one more order period where institutions can also place orders. It's on this day that the bond's interest rates will be set. Then the financing is expected to close on May 11th, and that's also when the bonds will be delivered to investors. Turning to the next slide, we're really encouraging all investors to learn more about the Green Liberty bonds by reading the preliminary official statement and also going to greenlibertybonds.com. If you'd like to buy a Green Liberty bond, the first step is to contact a broker and open up a brokerage account at either Stiefel or Ramirez. We have contact information below for both firms. Additionally, we will have a large selling group of other municipal bond underwriters that can access the bonds during this initial offering. So with that, I'll now turn it back to Brian Garcia. Brian?
Thank you, Eric. And that is the Green Liberty Bonds 2021 offering by the Connecticut Green Bank in honor of the 51st Earth Day next week on April 22nd. We look forward to individuals and institutions investing in these green bonds across the United States. Green bonds us. The environment unites us. We're happy to take your questions.
So thank you, Brian, and thank you everyone for that terrific presentation. We've had a couple of questions come in, and I think we'll start with a broad one and then go to a sort of more specific one. Question came in, Brian, I think would probably be most appropriate to ask it to. What is Connecticut's policy on climate change?
Good question. Connecticut actually has a long history with respect to climate change. In August of 2001 in Westbrook, Connecticut, the New England governors and Eastern Canadian premiers gathered and actually passed Resolution 26-4, a resolution concerning energy and the environment that established the first greenhouse gas emission reduction targets for the New England states and the Eastern Canadian provinces. Then in 2008, the Global Warming Solutions Act passed, essentially turning those regional targets into actual law here in the state of Connecticut. So reducing greenhouse gas emissions to 1990 levels by 2010, 10% below 1990 levels by 2020, and 80% reductions of 2005 emissions by 2050. Then in 2015, there was a policy passed that established a 2030 target of reducing greenhouse gas emissions by 45% based on 2001 levels by 2030. So those are the foundations to Connecticut's climate change policy, is the reduction of greenhouse gases. But you can also imagine a number of other clean energy policies, renewable portfolio standards that we've been talking about all evening, all intended to reinforce the need to drive more investment in things that help us reduce those emissions, reduce energy costs on our families and businesses, and deliver all the impact that we've been talking about here this evening. Great question.
Thank you, Brian. Next question, a little bit more specific question. I think Al or Eric McKean might be able to give some thought on it. We were asked to describe your view of the aftermarket. For example, if the buyer or his or her estate needs to sell the bonds that have been purchased.
Happy to, and that is a great question. These are standard municipal bonds that we are selling. And so there is a secondary market for the bonds. You would just need to work with your broker dealer on executing that order. And we would expect both Stiefel and Ramirez, the underwriters for this transaction, to be active in the secondary market. That's customary for our municipal bond market, but they will be liquid municipal bonds in the secondary.
Great, thank you, Eric. So there actually aren't any other questions right now. Actually, here we go. How did you arrive at 23 million and why is it taxable?
I can answer the first part of the question and also the second. We're sizing the bonds against the revenue curve that we showed on a previous slide. And we're trying to maximize the amount of bonds that can be raised against that revenue curve. So if we receive better interest rates than what we're expecting, that par amount will be higher. If the market moves away from us, that par amount could be a little lower. So essentially, interest rates derive how much we can raise in bond proceeds for this financing based off of our projected revenue curve. The bonds are taxable because there are various IRS laws that have to be followed to meet the tax-exempt status. One of those in particular is private use and the ruling on private use. The proceeds here originally helped incentive payments to individuals. And so it's not 100% clear that there's not a private use issue with the bond. So therefore, they're taxable on a federal level, but they are tax exempt for a state of Connecticut. Hope that answered the question.
A question came in asking if the bonds are available to people who live outside Connecticut. They definitely are. They would go through the same process. I'm going to go back one slide here, actually. They would go through the same process as Connecticut buyers would go. So sure, absolutely. So we'll hold for another minute here. If there are any other questions, please ask them now. If not, please visit greenlibertybonds.com to get any other information. This recording will be uploaded on there tomorrow, as well as the slide presentation. If you want to review any of it or share it with anyone else, please direct them to that link. And feel free to reach out directly through that site with any questions, and we'll pass them along to our underwriters and get them answered for you. Question came through, is April 11th the only day retail investors can buy the bonds? Yes, April 11th, April 11th, no, April 21st.
Yeah.
April 21st.
Yeah, we're going to run the order period for retail investors on April 21st. So that's the ideal time to put in orders, because that's when you will have priority over all other investors. Individual retail investors can also put in orders on Earth Day if for some reason they weren't able to do it on the 21st. And we will do our best to allocate bonds to retail investors, because that's our goal. But technically, you can put in orders on both days.
Thanks for clarifying that, Eric. We had a question on if someone could explain the redemption call.
Yeah, happy to. This is a common provision in the municipal bond market. What an optional redemption provision is, it's a call option granted to the issuer that allows them to redeem the bonds prior to maturity. So when we get to November 15th, 2030, which is the expected call date, the Green Bank has the option to redeem the bonds. And they can do that by issuing refunding bonds, so essentially refinancing the bonds, just like you would refinance a mortgage if interest rates are lower. Or for some reason, they could choose to just pay off the bonds. That's not the expectation, but that's what that call option allows the municipal issuer to do. And it's a feature that we try to incorporate into all the municipal bonds that we sell, because it provides really good flexibility for the issuer for unforeseen situations in the future.
Thanks, Eric. This is actually a great question that we probably should make sure we incorporate in the future into decks, but what defines a retail investor?
That'll be clearly laid out in the syndicate policies that get released on next week. Currently, that definition includes, of course, individuals, but then it also includes certain institutions that are managing money for individuals. So, for example, bank trusts, money managers, registered investment advisors that specifically manage money for Connecticut individuals and also individuals nationally. But those orders are limited for those institutions to $250,000. As well, they'll need to submit information to both Stiefel and Ramirez, just verifying that they are really managing money for individuals. And that'll be really clearly laid out next week when we start talking with market participants.
Thanks, Eric. Here's a question. Can one ladder the purchases for different maturities, and will each maturity date have a different interest rate?
Yes, investors can buy whichever maturity that works for them. There's no limit on which maturities you could buy, so laddering is an option. And it's highly likely that the interest rates will vary by maturity. We currently have an upward sloping yield curve, so interest rates are lower on the front end and then they get higher on the long end. And so it's pretty normal to see varying interest rates for varying maturities.
Great, thank you. I think this question is a good one for Brian or Bert or Mike. Do you expect to issue these bonds every year?
This
I'll
is
take
Brian.
that. Oh, okay, go ahead.
Yeah, let me take the front end, Bert, and then follow me up here. We do. You know, we've really identified Earth Day as an annual event that we feel is important to offer retail purchasers, retail investors, institutional investors an opportunity to invest in Connecticut and to help Connecticut to confront climate change. So we do anticipate that, yes.
Great, thank you, Brian. So there are no other questions right now. One last question. Will you feature different designations for the bonds?
For institutional orders, it's referred to as group net, so the designations will be shared proportionally. For individual orders, those get allocated to the broker dealer that brought in that order. So we are not doing specific designations for this financing.
Okay, well, seeing no other questions come in, I'd like to thank all of you again for presenting tonight, to thank all of our audience members for attending. And again, if you have any questions, please visit greenlibertybonds.com or reach out to us directly and we'll be happy to answer them. Thank you all for your time this evening.